One thing that I've noticed in the Indian ecosystem is that most professional investors are not using any sort of analytics, be it mutual fund distributors or SEBI registered financial advisors or any portfolio managers or professional investor in India. And the reason is just a bit more complicated, right? So it's like the lack of tools is one reason. The second reason is the complexity of using the existing tools makes it even more difficult, and also the price point for a lot of advisors in India, right? So in this video, what I want to just cover and explain is analytics is not just something that is good to have for your clients, but in this century, in this era of where everyone is moving towards analysis and data science and historical backtesting, analytics is not just like good to have. It is something that you need to have to see your business grow by tenfolds in the next 10-20 years and have a business that is just perpetual, right? So this video is just focused on showing why analytics just plays an incredibly crucial part in your professional investment journey. So if you're an investment advisor or a mutual fund distributor, you need to watch this, because this is something that clients are expecting you to have, and this is something that you need to have to keep your clients for the next foreseeable future, right? So I will give you a lot of examples in this video why analytics, you need to have analytics in your software stack. First, I'll just quickly analyze a fund and we will go on to other examples. So the first one is benchmarking. Benchmarking is incredibly useful for you to see whether a fund is adding value to your clients or not, because you're paying an expense ratio for it and a fund manager is managing it. So for the time and the expense ratio they are charging, right, is it doing justice? So in this case, I'm just quickly analyzing DSP Midcap growth. It is incredibly underperformed the simple Midcap 150 index over the last 5 years, right? There was an initial surge of outperformance in the first year or so, but since last 4-5 years, since 2021, it has brutally underperformed, right? And this fund we are analyzing is the DSP Midcap regular growth fund, is charging 1.7%, right? High fees, low returns, something that you need to be aware of before recommending this fund, right? And when, let's say, a client comes to you with this fund, you can incredibly impress them by just showing that you are underperforming the benchmark, right? This is one example. When you come into Fund Analyzer, it just debunks all funds, right? So you can go into each and every layer. It's like a story unpacking on each and every tab of this tool, right? So this first tab itself kind of like throws away a lot of advisors, because they just think, oh wow, this is like incredibly useful, because out of all the hundreds and 200 benchmarks that we have, we select a benchmark that is the most appropriate, not the one that's fund manager is picking, but the most appropriate for you to compare this fund against. Since it's a mid-cap fund, it automatically picks a mid-cap 150 index, and you can quickly see whether this fund is adding value or not. Second one is, this is a bit more interesting because this is a multi-factor product, right? When you think of a multi-factor product, you think that, oh, this is so interesting. But when you just again compare it to a benchmark, what is happening, right? It couldn't beat a simple Nifty 500 index, right? This name itself sounds more complicated, multi-factor passive fund of fund direct growth, right? But it has underperformed since its inception. And if you want to analyze this in depth, this is where our software exceptionally debunks any portfolio or fund in the world. And I say in the world for a reason, because we don't just operate in India. we operate across globe. So when you subscribe to Phenomenal, you're not just getting access to Indian mutual funds and Indian ETFs and Indian stocks. You're getting access to global ETFs, global mutual funds, and global stocks. This includes US, UK, all the funds, stocks across globe. You get access in one platform. Getting back to the multi-factor, right? Why is this underperforming? If you want to analyze this in depth, I've already done this by creating a portfolio, what this fund is holding, right? So this fund is a fund of funds, so it must be holding other funds. So I created a portfolio here. So now we are moved from fund analyzer to portfolio analyzer to analyze this fund of fund in depth. And you can, in the previous tab, we already saw that it underperformed Nifty 500. But why? How can a multi-factor product underperform? And the problem becomes more evident when you look into the holdings analysis of this portfolio. So what does this holdings analysis tell you? So the holdings analysis tell you in this, what it explains is that you get this factor exposure analysis. Basically, you can think of this as a risk analysis, right? Where on different metrics, how is this giving exposure to different asset classes and factor exposures? So what you see here is that you have beta to equities, beta to bonds, beta to commodities. These are asset class factors, and you have the equity factor, value factor, size factor, momentum factor, and volatility factor, right? You know the problem is, so let's take an example here, right? Beta to momentum factor. So the momentum ETFs has high momentum exposure to the momentum factor. But what about the other ETFs? They give you negative exposure. So this 16 plus 12, 28 plus 32, right? You are actually offsetting the momentum exposure that you want in your portfolio by adding other funds that are giving you opposite exposure. It's like combining hot water and cold water to get like a lukewarm water, right? So you're not focusing on one factor. So that's why a lot of multi-factor products across globe fail to perform well, right? So you can also see on a portfolio level, it doesn't have any exposure at all, right? So there's almost no exposure to any of the factors. This is called multi-factor product, just so you know again, right? So almost close to zero, right? So value is almost zero, size is zero, momentum is zero, quality is zero, low volatility is zero. So essentially what you get is just a market tracking product with a complicated name, right? Again, you're debunking an extremely complicated portfolio here in just seconds, right? Within like a click of a button, you just debunk the entire portfolio, the fund of fund, in seconds, right? Again, gives you clarity. You can explain this to your clients more in depth, and more importantly, you can eliminate these kinds of funds when you're constructing a portfolio for your clients. Next one is, see, everyone is interested in PMS and AIFs in India, right? So we have a way to analyze them as well, right? So if you want to compare any number of PMS and AIFs in India, right, you can just simply upload the returns and quickly compare the PMS and AIFs in India, right? And you can compare it across different metrics, right? So since I have to keep this short, so to make this video worthwhile for you to watch, I'm just keeping this short, but this goes across a lot of metrics that you can analyze for your PMS and AIFs in India. The next one is, this is something that is very close to my heart because this feature kind of blows or impresses anyone across globe. So we all know that BlackRock released a FlexiCap fund a few months back. What is the problem with this fund, right? The problem is that it has a very short track record. With short track record, you also have a lot of questions. Hey, I don't know how is this going to perform well. I don't know how this performed before. So should I buy it? Should I not buy it? A lot of questions. You don't have to ask any of those questions because that's why we built something called replicated returns. right? So what it basically does is it takes the existing exposures, it goes back in time from 2000 and shows you how this portfolio or this fund would have done going back in time. It's like using a time machine, right? So you click replicated returns, boom, you will get how this fund, Geo BlackRock, which was launched November, like literally 4 months back, you would know how this fund would have performed during 2008 financial crisis, right? You can look at it on a rolling drawdown level as well, right? So on a rolling drawdown level, you can see this in depth on a rolling basis every month on month, right? Again, replicated returns, incredibly important for products that have a very short track record, because a lot of funds do have very short track record, right? Even 3 to 5 years, to be honest, is a very short track record. You know why? Because you can't analyze how this fund would have performed during financial crisis, which was the biggest crisis of our century, right? So you got to go back in time to see how your portfolio or fund would have performed, right? Incredibly important for you to analyze the risk and also show it to your clients, right? And help them understand that if you have like a portfolio of this, if financial crisis happens again in the future, this is how much you would be losing, right? Make them prepared with this analytics, right? Again, incredibly useful for your clients to understand the risk. Next, we will go into like an international product, which is holding, like a Luxembourg International Fund of Fund, right? So this fund is called, Axis Global Equity Fund of Fund, right? But the problem here is that it's a fund of fund, right? So it must be holding again another fund. But this fund, unlike the multi-factor fund of fund that we saw, is not holding an Indian fund. It's holding an European fund. So you get a European, when you go into Axis Mutual Fund website, you can get the holding, right? So it's holding 95%, pretty much it's holding this fund, right? From Europe. No other analytics software has this feature. You can't analyze like a random Europe product in the analytics software, right? That's why you have to look into analytics more in depth, right? So you have to know how this fund would have performed since its inception, right? So you can quickly go into, let's say, global product, right? So I'll just open another window. So you can go, I'm already in global, so here, so you can go into Fund Explorer, and this is the magic of Phenomenal, right? Where you can go across markets. So I'm going from United States, you have India here obviously, and I'll go to Europe since this is a Europe product, right? So this is I haven't copied the fund name here, so I will copy this fund, copy paste it here. You're seeing the magic here, right? You're getting access to a fund from another part of the world in just a click of a button, right? So this is the fund that it's holding, right? The share classes might be different, but you can also go through all the share classes that we have here, right? So you already have access to this fund, which this other Axis Global Equity Fund is holding, right? Then you can just go in depth into this fund and compare it to a benchmark that you actually don't have in India, right? So you will compare it to a global benchmark, which is FTSE 100 developed index. So you can analyze this on a much more in-depth level, so that you would know whether this fund is doing well or not, right? So when you compare this fund, this Axis fund that's holding, compared to FTSE developed, it doesn't add in any value. It has indeed produced negative excess returns, and it has behaved exactly like a benchmark. So no point paying 1.8%, almost 2%, right, which is incredibly expensive for a fund manager to mirror the index. Again, right, you can quickly weed out all the unquality funds out there in seconds, right? And finally, who doesn't like reports, right? So here I already have like a portfolio, and when you click fund fact sheet, like this is like a portfolio fact sheet since we are in portfolio analyzer, it will automatically create you an AI summary. And by the way, there is no hallucination here, because this takes in all the metrics that we are all showing in our platform, right? These are mathematically created. We are creating all this with formulas and stuff, right? So none of these numbers are just taken from a random website. This is the data that we are using to show all the analytics in our platform. Once you have the client summary, which is very important for your clients to understand, right? Not a lot of clients understand all the metrics, right? To put it out in a concise text format helps them understand too what kind of value you as an advisor or a mutual fund distributor adding, right? Then you can click generate fund fact sheet, and you will get a report something like this. And this is something that just goes beyond any sort of PDF fact sheet that you get from any other providers, right? Because it's very clean. You will get a nice AI generated summary with the data that we are using, and you will get a nice little summary, very easy to understand, very very easy to understand, and also visually very appealing, right? Just gives you a professional institutional grade PDF report in a click of a button to impress your clients. That's all I wanted to discuss. I hope you start using analytics on a day-to-day basis, not just for your clients, but also for you to understand the market in depth, right? So the portfolio analysis, the finance analysis itself, like it's an evolving field, right? And Phinominal, we just publish tons and tons of research on a weekly basis, and we create a more we hope to create more and more useful analytics for all of you based on research. Thanks a lot for watching. I will see you next time, and if you want a customized demo from me, you can go to Finominal.com, click book a demo, and I would be happy to connect with you. And yeah, let's get in touch soon. Yeah, thanks a lot for watching. I'll see you next time.